Hello and welcome to Pro Trader Strategies Market Commentary for Wednesday, April the 7th. I'm Eric Wilkinson, and you very well may recognize me as the Wolfman from mainstream media, where I talk about the economic data, the geopolitical environment, how those come in to impact the markets with some of my market analysis. And I do the same thing in these daily market commentaries, but I also talk about my option strategies I'm implementing based on those assumptions that I come up with in my market analysis. Further, what we do for you folks is streamline that process to find that optimal option strategy for your given assumption. So what I'm saying by that is we aren't just picking option strategies out of the hat. Bullish assumption, buying a call. Bearish assumption, you buy a put. That's not how we work here at Pro Trader Strategies. What we do is we look at this underlying and we find out what the pricing is of those options based on its volatility. I'm not talking the VIX here, and then we'll find the strategy that will work for us. So check out our webinars where I show you that process step by step in order to find the best strategy for your given assumption, like I said. All right, so without further ado, let's get on with the economic data, see what's going on in the world, and see how the markets are digesting that information. So across the pond, remember we get this flash estimate on the PMI numbers, Purchasing Managers Index. That is the preliminary reading. We now get the final numbers, and they're all a little bit better than what was expected. So that's something good to see here. We got Spanish Services PMI coming in at 48.1, expected to be 45.6, or originally released at 45.6. Another thing with this number, anything above 50 is expansion, anything below 50 is contraction. And we got the Italian PMI services number coming in line with expectations, maybe slightly lower, but not enough to really shake a stick at, to be honest. And then final services PMI for the French sector coming in at 48.2, expected to be 47.8. German final services PMI stayed above 50 at 51.5, expected to be originally released at 50.8. And then the European regions coming in at 49.6, just slightly below the 50 watermark there, above 50 being expansion. It was 48.8, so a nice revision there, but didn't quite get above 50. And then Great Britain's services PMI number coming in at 56.3, which was right in line with expectations there. Now talking about the United States here, we've got Evans was speaking earlier today. Again, these guys are talking about not raising interest rates anytime soon for the foreseeable future. And to me, that means at least 2020 is definitely out of the picture. 2021 is definitely out of the picture. 2022 is pretty solid as not raising interest rates. As a matter of fact, the first time we're really seeing these Fed governors talk about raising interest rates is in 2023. So a couple of years out yet. Here in the United States, we also got our, yes, it's Wednesday, crude oil inventories number. It was a drawdown of 3.5 million barrels, expected to be a drawdown of 2 million barrels. That should give lift to crude oil, but we are already at elevated levels based on for future demand here. I think we're seeing a little bit of pullback as there's some more lockdowns still happening. It doesn't feel like that here in the United States, as a lot of we're opening up. We got baseball in full swing, all of those things. What's happening though is a lot of other countries are starting to lock down again, and that is a little bit of an angst in the markets. And something to talk about here with the overall rest of the equity markets is that we can see here with the bonds pretty much unchanged. But let's fast forward, having trouble talking today, to the equities here. We can see the Bitcoin is in slightly negative territory here. We've got the gold futures in negative territory right there at the point of control, folks. That's going to be where we start settling down here, other than in the equities. Now, when we're looking here at the VIX, we can see the VIX is coming off, and we've been seeing this consistently over the last week, basically, and into last week, where we broke out of that 20 handle, and I started talking about we're back into the teens. Now, the teens used to be pretty high VIX. Well, not as of the last couple of years. We've been seeing 20s as being low in the VIX. Well, we broke below that, like I said, last week. Now, we are at all-time highs, and that usually sees a point where we usually see a point there where we're at all-time highs, and sometimes we'll see that volatility VIX index start to creep up as people are buying calls or buying puts, because for one, they're either fear of missing out, that's why they're buying calls because they're wanting to continue on in this trajectory, and buying puts because they've seen these substantial gains in their portfolio and now they're starting to be a little bit more cautious and add some protection. We're not really seeing either one of those happening here over in the VIX as it continues to come off. Now, I've talked about this week already. The market wants to cause as much pain to the greatest amount of people at any given time, and this could be setting up for something like that, where we have reached these highs. I think that we're going to probably see some volatility within a tight bit of a range, which sets us up great, actually. Now, shooting from the hip here, we've got our webinar where we're looking at swing trades based on market setups and this volatility, where we can find these ranges in these underlyings, and I'll show you how to do that in this webinar, and then we'll find the optimal option strategy based on that. So we'll dig into those underlyings and I'll show you that process in those webinars. So check that out tomorrow. Go to protraderstrategies.com and sign up for that if you would. And then let's get on with the NASDAQ. We've got the NASDAQ is in positive territory, but at any given time, folks, we're seeing these equities bobble back and forth. So a mixed bag at any given time here, as we are still near the highs of the overall markets. And we can see with the Dow Jones Industrial Average, it is off by about 50 points on the lows of the day. We were seeing this market move a little bit higher in positive territory. As a matter of fact, when I started getting ready for this, the only thing that was in negative territory were the bonds, gold, and Bitcoin, basically. Now we're seeing a lot of markets start to struggle here, and we'll see this show up here in the breakdown of the mini S&Ps, which we can just see just went into negative territory. That an inside day as of right now, well, maybe. We got the value area low a little bit lower as today's, as we're continuing to sell off here. That's kind of drawing that value area low outside of that inside day. But it was pretty tight, tightly wound earlier this morning. But we can see that during the day session, we're seeing some weakness fill into this market. Now, does that mean we're creating a top here? That we're going to have to keep an eye on. As we're keeping an eye on these swing trades, we could be seeing a topping pattern here with confirmation in these equities. So let's talk about what I've done in the markets. I've got this snap trade that I just feel like I put on not too long ago, and today, like we talked about with staying mechanical with these types of trades, right, is that we are looking for certain targets here, and that's what I was looking for with this snap trade. And I put it on not very long ago, about the 31st of the month, so right here close to the lows, and we did this on the setup for these swing trades, right? Well, we got this bottom pattern here. We got it to settle above the Fibonacci, right? And I said the next day, that's where we got the confirmation. That's what I'm looking to put this trade on, is when we either see the bottom, I'm usually a little bit earlier, but we got this confirmation here. That is a green light to go ahead with this type of trade. And I went into the June, not because I'm looking for holding on to this trade forever. What I'm doing is trying to limit some of those headwinds that we get when we're talking about options, and I'd go over those in the webinar, so please check that out. So I went into the June, limit that theta decay, bought the 60 calls in there for $3.55. Now, we're talking about trading right around here, buying those calls. I talked about this. As soon as my calls get touched, right, my probabilities of touch is 2 times that of the delta. So I beat the probabilities in this case when it went up there. Now, I talk about this 2 types of exits on this strategy or on this type of swing trade is generated when we build out this strategy, right? And I was looking for it to go up there and trade 60. That lined up nicely with the 200-day simple moving average and this Fibonacci, which I felt we would find some resistance. It found support there before, so I was pretty confident we were going to go up there and at least test that area. So as soon as we started trading 60, that's when I'm looking to get out of that. The other thing I said is if you get 2 times the debit, that's also another exit location? Well, it just so happened that the way that I set these strategies up, most times if you go up there and hit that, or the market goes up and hits your strike location on these long option strategies, you will see your premiums double. So those are where the two exits. It hits your strike or your premiums double. That's what I was looking for. Well, it just so happened that I was able to get out for $7.10, which was a double of my premium while it was hitting my strike. So all of those things came together nicely there. I'm looking at a couple of other things in my IRA where I might be looking to take off here relatively soon because they just are not working. They're making money, but they're just not making the types of upward momentum moves that I'd like to see there. So I'll keep you guys all posted as to what I do in that regard. All right, so that's all I got for you guys. Take a moment to read over our disclaimer at the end here and check out our webinar that we're doing this new series on, where we find setups for swing type trades, and we're using options. We're implementing options around these types of strategies. I show you when, where, and why we would use these options, and why it's more obviously more beneficial to use options than going out there and just buying that stock. So we'll go over all those details in this webinar. So check that out. All right. So if you can't take that, take it easy.